right, welcome to another episode of Your Business Unleashed podcast. Today we're talking about document retention and what kind of documents that entrepreneurs should keep track of and hold on to, and how long and all that. We've got our Canadian indirect tax expert, David Crawford, on with us. Thank you so much for joining me, David.
Thanks for having me.
We had a lengthier version of this on audio on our website, but I figured we'd record it for video for those who follow our YouTube channel. Why do I have David here? Well, David's a former CRA auditor, and you've been through a lot of audits. Am I right?
Since I left there, I probably dealt with more audit controversy, client support than when I was there. So
Yeah. So you're a pretty good resource to have. I know that I've been through some audits with you, and I really appreciate your perspective as a former CRA auditor and someone who's dealt with a lot of it since then. So I guess we could start off by just saying, like, why does this stuff matter? Why does document retention matter in a sentence or two?
it's really just comes down to audit is when I've been asked to come in and help audit defense, either after the fact, like, maybe a client's tried to handle it up front with the auditor and you get brought in and you realize why the audit's not going so well is because there's not great documents for the auditor to go off of, right?
Sure.
And so they get frustrated, and that just breaks the rapport. It just creates an adversarial environment. And far too many times I've been brought at the last minute, and it's kind of too late because it's pretty broken at that point, and a lot of it has to do with poor records.
Yeah, fair enough. And so the thing to keep in mind here is our income tax law. I'm sure it's the same in indirect tax law, GST and all the sales taxes, is we have a legal obligation to keep good documents. And we're going to talk about that as we get through this. But when CRA asks you for something or asks you for support for something, you have to provide it. That's how it goes in an audit. And so we have to keep track of those those records. And so if you save $1,000 receipt, you spend $1,000 on something, and your maximum tax claim on that, if you're, say, an individual with a sole proprietorship and you're at the top marginal tax rate in Alberta, that could be a $480 claim. So if you extrapolate that up to, I haven't saved taxes for years, and you end up in a full scope audit at 48 points, where the CRA goes, listen, you don't have proper documentation for this. And by the way, proper documentation is not a bank statement with a line item on it in most cases. They're just going to deny those expenses or whatever, or they'll fill in the blanks on their own, and they have the legal ability to do some of that, right? So this can apply for things like spousal loan documentation, investment management fees. We're seeing a lot of this year. Almost all big investment management fees are getting called charitable contributions. That's a big one. Those can run 50+% if you don't keep track of those, and the CRA doesn't have copies of them on their end. Where a lot of stuff they do have copies of, and you can simply log on to the CRA portal and grab that source documentation because, for example, I'm an employer, I issue T4s for people, I can log on and get, somebody who's under audit can log on and get those T4s. We're talking about everything that isn't that. And the evidentiary burden to prove something is in fact legitimate and that it was incurred to earn business income, that rests with the taxpayer. So that rests with the corporation, or that rests with the individual sole proprietorship, and that's built into our legal system, right? So it is in both the Income Tax Act and the Excise Tax Act, and there's core categories that the CRA lists of things that you need to keep. Do you have those off the top of your head, David? I got a list of them right here. So
the categories that you need to keep, well, I mean, we got your physical books and records, the old school stuff, right? Electronic records, so invoices, purchase orders, if applicable, sometimes cash receipts even can be documented if you document it. And then obviously that all getting entered into, you could probably even do it on an Excel, but do you have the source document to prove? And for GST purposes, if you're claiming a refund for GST you paid on meals and entertainment, in theory, they will want to see, well, how is it laid out to earn income, right? And so who did you take for lunch and what was the purpose, right? And do you have the receipt that shows that there was GST on it? Or,
perfect.
Or if you're in the factor method, which we can get into later, do you have something to support that you paid this for business purposes?
Yeah, good. So the core categories, and you hit most of them. We got sales and purchase invoices, receipts for expenses, bank records. So that's checks, deposit slips, statements, payroll and HR records. It's funny because The CRA has a lot of this stuff. You're still obligated to keep them. Contracts and agreements, tax returns, GST filings, financial statements, ledgers, journals. So a lot of people don't think of that as being a financial support documentation, but sometimes we need a general ledger account to support that ties to a bank statement to support a claim that's been made. And then David hinted on contemporaneous documentation, which is scratching on your lunch receipt who you took for lunch and why. They do require that. So sometimes a receipt that says a couple of steaks at Caesar's, that's great that that's on there, but why? Why did it happen? Well, I don't remember. That was so long ago. Well, it's our obligation to remember. And maybe you can tie that back to a calendar event or something, but you should think about putting that contemporaneous stuff like a, scratch on the reason for the expense right on the receipt. I know that we do that when we do bookkeeping for people. We're trying to enter into the comment fields as much detail as we can to support that. That's contemporaneous documentation. You're also obligated to keep correspondence. And you're supposed to keep it for 7 years, right?
6 years after the end of the year.
6 years after the end of the year. Thank you for that clarification. Well, if my return goes statute barred, meaning the CRA can't take a crack at it 3 years after the notice of assessment date, why do I have to keep it for 7 years?
Well,
or
for
6 years plus a year.
6 years. There is, that extends into international tax matters, right? In terms of the timelines for those types of things, right?
Sure.
I don't know other reasons why it's six years after the year.
Yeah, well, I can think of a practical reason is if there are certain circumstances within our tax act where the CRA can open up more years, okay?
Right.
And so if they find something that they don't like in the course of your audit, which is within the statute barred period, and it causes them specifically with regards to gross negligence and things of that like, our statute bar doesn't apply, and they can go back as long as they want if they found something that they don't like. And so, our angle is, why not keep as much as you can forever? I mean, the digital storage is pretty cheap, right? So we've kind of already talked about the ITC documentation standards. ITC is an input tax credit for GST purposes. That's you're claiming GST or HST back on something that you've paid because that's how the system works is with indirect taxes. And hopefully I'm explaining this correctly, David, but it lands on the end user. So if I go out and buy a computer and I pay GST on that computer for my team, I can claim the GST back on that. Yep. But then when I go and sell my service to an end user, if it's to a business, they can claim the ITC back on the GST that I charged them. And when they go provide their service to the end user, that's where the final buck stops on the GST. So if I sell a personal tax return to one of our clients and charge them GST, unless they have a business and a GST account, that's where the buck stops. They cannot claim back the ITC. So it kind of flows through the system to the end user, right? As a concept. So claiming back
all
ITC
VAT systems work the same way around the world for the most part. Right?
All VAT, okay.
And the documentation standards, that's universal. It's like you need to prove that you paid that GST to somebody who legitimately collected it and reported it, right?
Right.
And so the documentation standards of that versus income tax, this is worldwide, are a lot more rigorous.
Right. And so when I'm looking at claiming an ITC from someone who charged me GST, what types of things are the CRA looking for? So if I go and get somebody to come and deal with my yard and do some landscaping and GST ends up on that invoice, I guess that's not a very good example. Sorry, let's go back to the computer example. I buy a computer, there's GST on the bill, I want to claim it back, and I need to provide that invoice to the CRA as documentation. What types of things are they looking for on that receipt to ensure that I have a valid claim?
Let's just go Best Buy, Costco's way about it. Those are big companies. They have their invoices, et cetera, to you have their name, their GST registration number, the amount of the tax. It's all nicely done, right? Not every business out there does it so great. And one of the things is that on the invoice that should be made out to you, the purchaser, with the legal name of your company. Yeah. Not, some employee or whatever is not ideal. And so the three things that they look for is there a valid GST number? Does it match in their system to the name of the supplier? And is your legal name there? Those are the three big things they look for.
Thank you. And so I think we've been busted on that.
Hit and miss, and they key in on that in the construction business, and they have a field day with it because there's a lot of errors. Same with oil field services as an example. Don't mean to pick on them, but those are the two I see a lot.
Right. And so you end up in a situation as a company of somebody who's hired, say, a trade or a subcontractor who's put some GST on their invoice. You've claimed it back, and then the CRA comes back in a few years and goes, well, wait a minute, none of this GST that you've claimed back is valid because the person who issued the invoice didn't do it properly or didn't have their GST number, or the GST number's wrong, or whatever. And all of a sudden you're end up holding the bag with a big GST bill for GST that, let's say GST with air brackets that you've paid somebody else. You don't get to claim that back. And so you end up holding the bag on that GST bill.
Right? We
Yeah,
saw
we
that
just
happen
had that
with one
happen.
of our clients this year. The supplier subcontractors thought that they were registered, charged GST on other bills. Our client claimed it back. They got audited for a bunch of other reasons. And it was like $50,000 of cash just gone.
Yeah. Yeah. Okay, let's move on to motor vehicle. I'm going to hammer through this stuff pretty quickly. Logbooks are important, and in your logbook for your travel. And so this is in the context of charging some of your car back into your company or writing it off against your employment income. You better make sure you have a logbook, and the logbook better contain date, purpose, destination, distance, odometer readings annually, purchase and sale. These are all good things to keep. And if you're doing a non-simplified method where you're actually adding up all your expenses, you better have receipts for fuel, repairs, insurance. You better have lease agreements. You better have a T2200 on file if you're an employee and you're writing your car off against your employment income. There better be a 2200 signed by your employer. And there are some, you can go onto a blog that we've done on our website and learn about where maybe you can just hang on to a quarter worth of travel data and the CRA will allow you to extrapolate that. There is a mechanism for that under certain circumstances. Go read about that on our blog. And so, yeah, you want to just make sure that you're hanging on to all that stuff and claiming it properly. And it can get, especially even with GST and ITCs, it can get a little sticky on how you claim that. So there's a blog out for that. Go have a look at that. In terms of the detailed method versus the simplified method, if you're charging kilometers into a company, it doesn't have to be your company, but it could be your company, and we're talking about an incorporated company, and you're using your personal vehicle for business purposes, and you're charging your employer back, or you're charging your own corporation back, you can stick with CRA's flat rates. They publish them every year. There's CRA's flat rates for certain types of travel, for certain meals allowances, hotels allowances, and those are all published on the CRA's website annually. And what that allows you to do is just keep a kilometer log. You don't have to keep track of all your fuel receipts and everything. It's just it's a prescribed per kilometer rate. It's very good, I think, in terms of covering your costs of operating your vehicle. It's meant to cover maintenance and gas and insurance and tires and all the rest. And it's all sort of built into that rate. And it's so much easier than keeping track of all your receipts. So hang on to that. Okay. So in terms of, I want to talk about the quick method versus the simplified method for claiming ITCs. And so can you just hint on that for just a minute or two, David, in terms of the two different methods for claiming ITCs?
Well, the quick method is a very different way of doing your GST returns, and you have to be a very small business to use it.
Okay.
And so you still collect GST, say at 5% on sales here in Alberta, for example. There's different rates for different provinces based on where your permanent establishment is, but you remit something less than that. But you don't have to claim input tax credits and keep track of that for all your daily expenses. And then you can claim full input tax credits for capital purchases, like say a laptop or office furniture or something like that, that's considered capital. Simplified method, again, you have to qualify for it, but you don't have to file an election with CRA to use it like the quick method, which a lot of people we've seen just start using the quick method, but they don't actually file the election. So they're technically not able to use it. So the simplified method of claiming ITCs. So again, you collect GST at the normal rate, you remit it at the normal rate, unlike the quick method. And then you just take all your normally taxable expenses and basically back out insurance, bank charges, interest, salary and wages and stuff like that. And then multiply all the taxable categories by the tax rate of where your province is. So let's say Alberta, you would take, the tax rate's 5%. And then you divide that by 105, and then that's your input tax credit that you claim, right?
Got it. Yeah.
And then there's the factor method, which is a totally different story.
It's a third method. There's a lot of methods. So are you saying that for the simplified method, do I still have to keep receipts, or is my GL good enough? Okay.
Yeah, you still have to technically have receipts under the quick method just to show that you actually incurred them. I've never seen them audit too many people under the quick method because they're so small.
Right. And just for everybody who's out there, like we're talking about a contractor who has very little expenses, is sort of a good candidate for the quick method. And how much GST you get back is a function of how much sales you made. There's a mathematical calculation, and it's a mathematical calculation on how much you've collected in GST, and then it sort of spits out a number of how much you can claim back in ITCs. In the scenarios where I advise my clients to do it, they're almost always better off to just use the quick method. But there is also limitations on who can do it. So
if you're in the services business, the quick method, you can make a little bit of money on it technically.
Yeah.
It's not really good for a goods intensive business. So yeah, you're right. Consultants and folks like that are kind of in the services area and don't have a ton of overhead and expenses. Is really good for them if they qualify, because there's a revenue threshold that you have to be under. I think it's 500K now.
Okay, perfect.
And you got to file that election, which people
you have to file the elections. So quick method, there has to be an election on file at the CRA, and I have seen it with clients who've been filing it quick method for years. We pick them up and we go, great, show me the election. There isn't an election. And so, you have to make a decision about what you do about all these historic filings, if anything, and do you go and put an election in now? Those some decisions to make there. In terms of the factor method, I love the factor method. Maybe I'm off base by loving the factor method so much, but it seems to me that this is like a bit of a wiggle out on the amount of documentation you have to keep. Am I right on that?
Yeah, definitely.
Okay. How does the factor method work?
Just in a nutshell. So the factor method is all about input tax credits. Usually the best way to describe it is it's ideal for employee expenses, right? Or even shareholder expenses. Basically, you submit an expense report to your company like employees would do to any other company, right? And so instead of keeping low dollar value, high frequency expenses like Uber travel, meals, entertainment, all kinds of little stuff.
Yeah.
You can just take a factor of, so let's just use Alberta again for example. Let's say you've got let's excluding tip, let's say you have $105 lunch, including GST, right? And so instead of keeping track of that receipt maintaining that and claiming the $5, instead that employee or shareholder or whatever can just submit an expense report, obviously with other bunch of expenses, and claim a factor of 4 over 104 instead of 5 over 105. So it's 1 percentage point less than the tax rate divided by 100 plus the tax rate minus 1. So there's where you get the 4 over 104.
Right.
And then you claim an input tax credit of $4 instead of $5. And then you're losing a little bit of money, but you're gaining a lot of efficiency in terms of, do I have to keep that receipt all loaded in and just put it in an expense report? So we've done a pretty comprehensive article on the factor method on our website that describes it. I wish more people would use it. It will change their life.
Yeah. And it makes bookkeeping just a lot easier, right?
Yeah. And you can do different categories of expenses. So if you have big ticket dollar items, so like travel, hotel, that's your biggest cost when you go to travel, airfares, minor. You can take the actual tax amount, but you got to keep the original receipt and have the proper documentation from the airline and the hotel, just like every other normal input tax credit. So that's not the end of the world if you don't have a ton of that. But you can use factor method across all your expenses if you want, right?
You're just not getting the full ITC back.
Yeah, and it basically has to be employment expenses, things that would require an employee expense report effectively.
I see.
Right. So that's the limitation. Your typical payable in a company, you can't use the factor method for that.
I see. Okay, so I can't just, for indirect tax purposes, just subvert my whole record documentation system by using the factor method.
No, it's for employment expense intensive businesses, right?
Got it. And I think it's really important
with a lot of travel, that kind of thing, right? Salespeople, that kind of thing. A lot of meals and lunches and taxis and Ubers and things like that.
Got it. Small stuff. And I think it's really important to highlight that this only works for indirect tax purposes. So if you're under GST audit and you've used the factor method and you've done it correctly and you didn't hang on to that receipt, you're probably okay. That doesn't hang for income tax purposes. So if they're challenging an expense, you got to have all your records, right? So you just keep track of that and make sure you don't confuse the two. Okay, personal tax records. Well, A lot of this stuff the CRA already has: T-slips, T4s, T5s, T5008s. Now they're doing RRSP contributions are there. Donations aren't quite on the CRA's website. Medical receipts aren't on there. Spousal loan support. There's still the 6-year after the year that you're talking about rule. Now you go, well, a lot of this stuff is on the CRA website. Why would I need to keep that? And the reason why I would submit that you have to keep that is last year, for example, the CRA's website was a mess and it didn't have everything on it. And we didn't get some T3s until September last year. And we were guessing. And I actually had the CRA assess penalties for failure to report income. And it was income that the person hadn't received a paper slip, didn't realize that they were missing it. And when I went and looked on the CRA website, it wasn't there. And so there was a big sort of, there's a lot of talk about this in tax circles, and the CRA were asked about it. And they said, listen, it's not our responsibility to keep these records for you. You know, we provide them on our website sort of as a courtesy, which is sort of, you know, it's almost like the doctor prescribing something, and then when it doesn't work out, you know, they come back and say, well, you know, you didn't have to take that. I don't think it's cool, but it is the way it is. It's the way our law works, that you are responsible to hang on to these things. And the CRA, just because they have it, doesn't mean that that absolves you of your duty to keep.
Well, okay? Arguably, and you and I've talked about this, is that all of that was more than just a courtesy to taxpayers. That was a precursor to them filing your tax returns for you.
Automatic filing.
Automatic filing, right?
Which is alive and well and expanding.
So the conspiracy theorists had that one right.
Yeah, exactly. Okay, let's talk about electronic and cloud records. Can you keep electronic records and scans on your phone and whatever? Are you allowed to do that, David?
Yep.
Yeah.
CRA's got bulletins on, you know, keeping electronic records. Yep. Basically, it's got to have the same information as if it was a paper record back in the day before there was electronic records. So
it's got to be readable. It's got to be, I think it has to be stored in Canada, which I'm not exactly sure what that means. Like, what if I don't subscribe to Microsoft's Canadian cloud servers? I don't know if you're in violation there, but I think it just has to be readable and accessible in Canada, meaning you got to be able to get to it from Canada. You know, electronic receipts, audit trails, system documentation. So your POS, your accounting software backups, you have to keep all that stuff still. But it has to be readable. So if you have a crappy scan that you can't really read or make out what's on it, that is not good enough. It has to be as legible as the original. David, any issues with storing records outside of Canada?
Well, I deal with a lot of non-residents that don't have a place of business here. So they have to request permission from CRA to keep books and records outside of Canada. And I think that applies to residents as well. I'm not sure why you would. The big thing is can you make them available to CRA in Canada is really what it comes down to.
Sure.
You know, there's issues around customs and duties, keeping records inside Canada. That's a big deal for Canada Customs. You know, a lot of non-residents obviously aren't going to have a place of business here. So you have to officially request permission to do so.
Well, and it's super interesting because, you know, the access versus where it's stored. I mean, I think we all have a OneDrive account or a Google whatever, and it's like, well, where are those services? Or sorry, where are those servers?
Likely not here as a rule.
Very likely not here. In fact, I know on our Microsoft deployment, it's like an add-on to use Canadian servers, right? So, okay, so let's talk about consequences, tactics, and then we'll wrap it up. So consequences, I think we've already talked about the biggest failure to keep adequate records is they deny you some claim that, you know, results in a negative tax consequence for you, whether that's with GST or income tax, right? And when they do that, you know, they can potentially apply penalties here as well, right?
If because it's really egregious, they'll do it on the first attempt. Normally, though, they'll be like, your records in this area or that area or overall were deficient or really bad. And that's a warning, and they'll put a warning sentence on your file saying, if you contravene this again on the next time, there will be, you know, potentially this penalty or that penalty, which can be significant.
That's at the discretion of the auditor, though, right?
Yep.
Yeah. So, I mean, this is where rapport really matters in an audit. And if you get into an audit's different than a review. CRA will often ask you, hey, we noticed you put this on your tax return. You mind sending us a few things? That's a review. And if you send them it, you know, and you answer the question effectively to their satisfaction, the problem goes away. Whereas, you know, sometimes we go under full scope audit which is a very different beast. And if that happens, you need to have David on the call. You need to have David engaged with you to help you through that, or one of our controversy people who can help you sort of navigate that, right? So what are some common mistakes that, and so penalties. So the penalties can run, what are the penalties? I mean, they can get up pretty high if you're a repeat offender, right?
There's a lot more penalties that have been added, and not just from a GST perspective, but British Columbia PST last budget, not this budget, but 2 budgets ago, added a whole bunch of new penalties, right? So a lot more, the bigger stick and the stick that, can be hitting you many times. Right. Same with CRA, GST penalties pretty much are equivalent to those in income tax. Again, repeat offenses, it goes up, right? The next time you get caught. So, right. Yeah. And then obviously interest. I mean, we've been sitting on arrears interest rates, kind of 8 to 10% the last.
Yeah, they hit 10% right? During COVID, right? So.
Yeah. So that part gets expensive. It's not just the penalties; it's the interest and the compounding of that interest. And in that situation where, in the GST world, where you just can't claim an input tax credit ever again, and you're just out 50 grand cash, right?
Yeah.
Plus the penalties and interest on that. So you get up to 65,000 on that.
Oh, I've seen it double. I've seen the 50 grand turn into 100 because it's old enough, and, the penalties and interest are big enough. And yeah. And they do tend to target an industry at a time, or they'll run programs. We've seen a lot in the construction industry. There's specialized forms for paying subcontractors in the trades, for trades specifically, the T5018s, and that's meant to stem the underground economy. That's basically me who's hired. I'm a general contractor. I hire a flooring person to come in and do some flooring on a project, and if I'm over, I think it's $500 or something, I have to issue them a T5018, which means I have to gather their name, address, their business number or SIN, and I have to put that dollar amount that I paid them onto a specialized form and send it into the CRA, and the CRA can look at that and say, okay, this person paid that person. Let's go over to see that person's return and see if it was reported correctly, right? So they've got ways of catching this and sort of stemming the underground economy. And I actually had a client this year, who did a renovation on their house and went, hey, I paid my uncle 17 grand to help me with my renovation. And I'm like, great, you got a receipt for that? And he's like, yeah, maybe I won't write that off. And I'm like, yeah, maybe you gifted your uncle that money and you're not going to write it off, right? Like, how much trouble do you want to cause for that person when it's like, I don't know, right? And then that's not my tax advice. You should just report everything properly all the time. But if you're claiming a deduction, or you want to use business funds that are locked up in a corporation to which a lower corporate tax rate has been applied, CRAs doesn't really like that it doesn't get reported on the other end, right? So they're trying to stop a lot of that. We even had, in terms of a document retention issue, we underwent an audit where, there were travel logs, kilometer logs on where this company they were transporting things through the country, and they didn't have adequate logs on where the transportation was happening and how much time and kilometers were spent in province and territory. And that was a big one, right? And it didn't end up working out well for the customer because they just didn't keep those kind of records. Well, you need to be aware of what kind of records that you're keeping. And there's also this guilt by association thing where, we had one, it was a big franchise, nationwide franchise, who was paying franchise fees into the US, and there should have been withholding tax on that. Well, our guy, as soon as I picked up the file, went, hey, there's a problem here. And we got ahead of it. And before you know it, they're doing a nationwide audit on all of these franchisees for all this missed withholding tax, right? That should have been paid. So you can end up in a guilt by association program if you're not careful. So anyways, I think, those are some of the real penalties and consequences for not being aware of what you're supposed to hang on to. And so, in terms of practical tips, best practices, put your systems first, get into a cloud accounting system, have a good bookkeeper who's willing to ask you questions and dig a little bit on things. Maybe you don't send them every single LinkedIn marketing receipt that you do because there's 3 a week or something. Well, fine. Tell your bookkeeper, listen, I can log into the platform and download the last 10 years worth of invoices if I'm under audit, but make that a conscious decision in your mind going, I realize there's a risk here. I'm not going to move that documentation from that platform to this platform just to satisfy an audit requirement, because I can always go back to that platform and get it, fine, but make a conscious decision on that. Our Guru cloud-based bookkeeping solution is amazing at this. We really pride ourselves on doing good audit trails and asking good questions, but we get annoying sometimes. And we have a client set a preference that goes, listen, if you see $12 land on my credit card from Starbucks, please stop asking me for that receipt. I'm willing to live with that small amount of risk. If the CRA comes back and looks at it, it says Starbucks on the credit card, hopefully they won't be too pressy on that one. Make sure you have good internal controls and processes. Expense reports should have someone look at them. Are they supported by receipts? Keep business and personal records separate. If you got a corporation, try not to use it like your personal bank account. If you've got a business, try not to run all of that through your personal bank account. Maybe get a separate account and separate them out. Digitize but ensure accessibility. So how is your filing? Is your filing system good? Make sure that you've got good folders set up, or you're on a platform like Dexter, HubDoc, or whatever that sort of does a lot of that lift for you, or things are being scanned directly into your QBO. And just adopt an audit-ready mindset. A lot of times people don't adopt an audit-ready mindset of thinking about these control systems until they've been through this once or twice, which really sucks because going through it is not fun. It just costs you money. That's all it does. Even if you end up okay with the CRA, it's how much time did that take, and how much did I have to pay guys like David to dig me out of this pile of crap, when really what I could have done at the beginning is just set up a better system and be able to respond to that question really effectively with the CRA. So, and then my last tip would be get Audit Shield. We sell Audit Shield. It's a fee waiver service where for an annual fee, if the CRA asks any questions on your structure, on anything we've filed, we can go back and we have I think minimum's $10,000 worth of fee waiver coverage where we can go to town on responding to that and not have to charge you $450 an hour for the response, right? And so, I think Audit Shield's a good one. So practical wrap up and takeaways, entrepreneurs and business owners are legally responsible to keep proper documents and retain them for the proper amount of time. Simplified method is a useful tool for GST in specific cases, but it's not a blanket shortcut. Proper documentation is so important, especially for GST where they run a lot of this stuff. The auditors are pretty sharp, and with AI, they're getting even sharper. 6 years after the year is the general rule, some provincial variations, and be proactive in your systems and your habits. Try and reduce your stress and your money. Every time you have to get into one of these things, it's going to cost you time and money and take you away from what you're doing in your business to do better in your business. So is there anything else you think, David, that I've missed here?
I think just the general concept of an ounce of prevention, right? That old saying goes a long ways. It's better to deal with this. Well, you never have time to deal with it in your mind, but when are you going to have time to deal with an audit? And that it can be a big time sucker, especially a full scope audit.
Stress too, man.
Massive fees, and never try to DIY the thing from beginning to end. I can't tell you how many times that I've been called in at the 11th hour, and at 9 times out of 10, it's too late. The relationship's broken. The auditors set what they got. They know what they're going to do. They're going to just ram this through. It's been in their inventory too long. They've been hanging on to it too long. It's dragged out, and they just want to get it over with. And you end up with a bad result every time. So managing audits is not just having great records, although that helps. And not having Audit Shield, I think, is
foolish.
A risk. It's foolish because I've seen it work.
Yeah, it works. Everybody asks me if Audit Shield's worth it. Not everybody, but people ask me if Audit Shield's worth it, and I say, well, if you need it, it sure is, right? Yeah. Everybody who's used it has said it's worth it. And I think coming back to your main point, which we'll close on, David, is get help. Right? Audits are stressful. And the probability of you doing something wrong and not knowing you're doing it wrong because you tried to save $1,000 on a consult with somebody who knows what they're doing, that's extremely high. And if you're at that point, the auditor, another thing you said, which is critical, the auditor is trying to close their file, get their gold star, and move this along. Right? And you don't understand the process. You don't know your way through the CRA's audit manual. Guys like David does. So just get the help. It'll save you a ton of money and a ton of stress, even though, you got to part ways with a bit of legal fees if you don't have Audit Shield. So thanks, David. I really appreciate that.
You don't necessarily need somebody there throughout the whole course of it and run up a big bill. It can be just prepping you. It's like, here, don't do this, do this. Make sure you don't do that. Don't say this.
Yeah.
Right. And just a little coaching along the way. And people who try to DIY a complex situation, I just finished one and it just dragged on forever. And there was a bunch of different people, tax lawyers, other people had their hands in the pie and just made it worse.
Yeah.
And now we're at the 11th hour and there's really not much I can do. And they just closed the file. So
yeah. And then your option is appeal, which gets 5 times as expensive.
oh, they're going to tax court to finish this. If
yeah,
it's, you know, a couple $100,000, so it's probably worth it.
Yeah. That's it. That's all we got. Thank you so much, David. This has been a great session, and I really appreciate that. For anybody who's wondering about where they can find you for some audit help, audit support, where's that?
On our website,
aikenhenderson.ca. Yeah.
Best place to find me. Contact details are there versus me rattling off my email and hopefully somebody remembers it.
Perfect. Thanks, David. I appreciate this.
Thanks for having me.